at least its 5-year lows of around 680. You've got that stock trading in around the 720 mark. Let me bring on board Neeraj Dewan as well. And before I come to you, Neeraj, I want to quickly quiz Kunal on a couple of names. Kunal, HDFC Bank, one. Second one is if you can give us a perspective on KFintech and BSC. All three from within the financials pack. Give us a sense how you're looking at charts on all three of those.
So, Harsh, I think HDFC Bank, I think, is a mystery stock, frankly, because at the current juncture, it's difficult to decipher that, whether the stock is likely to go into any kind of a major rebound. So far, the indicators are weak. We may just hold on to the, the view that the stock is not doing much in the last few days. It's been just about meandering around the 720, 730 mark. We need to see meaningful data points emerge for HDFC Bank to either go into a further leg of a correction, for example, a break of the 700 mark and a closure below this, or a sustained close below the 700 levels could lead to a further drop into the stock price. However, on the upside, we are looking at a point where 740 is a major critical level in terms of a breakout. If the stock happens to do that, then we may expect some sort of a reasonable bounce back to come into the stock price. Till that time, we'll just hold on to the view of maybe being on sidelines for the stock in the near term. As regards to the other two names, I think KFintech as well as BSC. BSC, for example, looks extremely attractive in terms of risk reward. So, we go in for, stock prices which generally go into a retracement, a 20% fall from the previous swing highs, or a mean retracement towards a 200 moving average. In fact, BSC has actually, done all, these retracements, price-wise, time-wise, as well as a moving average retracement. So I think at current levels, BSC looks extremely attractive. We saw a bounce back yesterday. I would sense that 32, 3,300 could be a decent base for BSC. KFintech, on the other hand, the stock had a fantastic uptrend a couple of days back when there was this 4%, 5% up move. The stock had come back towards a break of 980 levels. We need to wait for a break above 980 for KFintech to go for a buy. Till that time, it'll just be more of a wait and watch.
Okay, Neeraj, let me come straight to you now. What's the take with regard to HDFC Bank and this announcement that LIC has in fact taken RBI approval to buy up to 9.99%? Do you believe this is opportunistic on LIC's part?
Yeah, good morning. You can say it's an opportunity in the sense because HDFC Bank has never traded at this valuation. They never traded below, 2, price to adjusted book value. So it's valuation-wise attractive, but we've been seeing HDFC being attractive for a longest time now. Even when there was some FI buying happening in the last few weeks, you didn't see much buying come for HDFC Bank. So I think they are in a position where they need to come out with some improvement as far as their performance is concerned. Maybe once you get more clarity on who's going to get, whether the current MD get an extension or what would happen beyond October, all that clarity will help because LIC may start adding at these prices. But then there seems to be a lot of supply in HDFC Bank. So let's see whether they're able to get some meaningful upside from these levels. But so far, it's been disappointing for investors in HDFC Bank.
Sub 720 yesterday and just about at that level at close yesterday. Kunal, what are the charts reading though?
So they look weak on the short-term time frame. The concern for HDFC Bank is that the stock is now showing weakness across the monthly charts. It's not just showing weakness across the daily time frame, but the monthly charts are weakened for HDFC Bank, and I think that could be a concern for the stock in the near to medium term.
Other than HDFC Bank though, Kunal, where is it that you're seeing strength or opportunity to buy within banks?
So I think a better name to try and go for a contra buy at the current levels would be Kotak Bank as well as Axis Bank. I think both of these stocks seem to have completed a phase of correction for themselves. They are now in that zone where the stock prices have flattened out. So, generally we see that when a stock price goes into a correction, the activity is very strong. And then once the stock prices go into a phase of a consolidation, the activity drops down significantly and the stocks go into a phase of a pause. Now, many a times we've seen that the phase of pause leads into a decent bounce back into many stock prices. And when we look at the charts for Kotak Bank as well as Axis Bank, there could probably be a case that these stocks may see a bounce back of sorts over the near term. I'm not expecting a major trend reversal for these private sector banking names, but I think from a current level perspective, say another 3% to 5% swing upside, I think Kotak Bank and Axis Bank could be something to watch out for.
The other ones, Neeraj, that are in focus is this entire purchase of stock by SIS Limited of Updater Services. It's a very fascinating play. I'm not sure if you've covered it or tracked it, where SIS now owns around 7.5% stake in its competitor, Updater Services. Updater Services promoter holding is 59% when I was looking at it this morning. So there's no concern or there's no worry of a takeover. This completely looks like a strategic acquisition where they just feel that probably the space is undervalued. I wonder if you feel the same or you're looking at opportunities like this one.
There are definitely opportunities in the broader market. SIS also, I saw the valuation, so it's not expensive at these levels. So I think, they buying a stake in the competitor also gives some sense, like you rightly said, that, the space may be undervalued as per the understanding. We saw a similar move in, sometime back in Sarda and Godavari Power also, the company bought other company's stake, some percentage. So I think definitely there is a broader market, there are opportunities in niche spaces like, whether it's chemicals, whether it's security, broader, different themes are emerging. And this quarter did see improvement as far as numbers are concerned. So I feel that there is an opportunity post these numbers to explore some of these companies.
Okay, just looking at some of the stock-specific action as well, and Hyundai Motor could be in focus. They're looking to raise the vehicle prices by 1% from September. Neeraj, irrespective of what you're seeing on oil prices and, of course, the staggered price hikes undertaken by most auto majors, that's not really hampering demand so far. Having said that, with the festive season now this time around postponed a little bit and pushed back, would you sense that we could see maybe a lean patch in auto demand before it picks up once again with festive season?
Yeah, there's a good possibility because till now we've not seen anything to suggest that there's a lean patch. But now, maybe for a month or two, you may see some sort of consolidation happening. So you've seen most of these stocks, volume growth was still very good. Margins were concerned because of obvious reasons, because of the oil prices and other reasons. So I think once you get this consolidation period, you get opportunities because over a medium term also, I'm positive on the auto space, whether it's the commercial vehicle, passenger vehicle, EV, a lot of these even, you see decent numbers from someone like Tata Motors also, passenger vehicles because of the EV performance. So that part of the market should do well for them. So I feel that if you get this consolidation period, I think you'll get opportunities to buy. So for the medium term, I'm still positive.
Okay. And Neeraj, what is it that you've bought recently? Any fresh positions you've entered or you're recommending at this point in time?
So basically, chemical space is one where we saw decent momentum as far as the numbers are concerned. So added some stocks there. And then even housing finance companies, something into, infrastructure funding, housing finance. I think that is one space. Also, I feel that order books are good, and even some of the real estate companies that come out with good, numbers for the year that the GDP values that we're going to have this year. So I feel that that space also can be interesting. So you saw some, even some real estate names I've added and suggested to my clients because I saw numbers improving there in spite of first quarter being lean. Still, the projection for the rest of the year seems decent for them. So purely domestic focused companies, non-ferrous metals also we added. Non-ferrous metals, we've seen a decent move in copper recently in the international market, and the stocks also did well. So I feel non-ferrous space should look good going ahead. And even auto ancillaries is one space where I added some tire companies where I feel that volume growth is good, margins will pick up once crude prices correct meaningfully over the next few months. So these are the kind of names, or the sectors I'm looking at.
Well, there's United Spirits as well, which is going to be in focus this morning. The FSSAI has...
Watch till execution picks up, at least at that end.
Yeah, actually, auto ancillaries, when we look at stocks specifically, valuation-wise, they're not cheap. Most of them are discounting a lot of these, earnings quite ahead of actual earnings coming in. So there is, very difficult to find out opportunities there because of valuation. I feel that once execution picks up, we get some more clarity on the kind of revenue and the profitability you're going to see over the next 4 or 5 years. Then maybe some of them on some correction. Very few, like I mentioned earlier also, tire companies, they are still looking attractive to me because valuation-wise, they're not expensive and they've seen good volume growth. But generally, if you see auto ancillary, there are very less opportunities because of valuation concerns.
Right. Okay, that's that when it comes to some of the auto and auto anchs and the derivatives as well. Kunal, let's revisit that auto anch theme as well. Any tradable opportunities still, even after that massive up move that's already played out in the sector?
Yeah, I think a couple of them. So, for example, Samvana Motherson is something which recently gave a breakout about those 145, 150 barrier. That's something which I believe looks very attractive at the current juncture. And specifically the stock just about trying to navigate and plateau around this 170 mark. So which means that maybe if there is any kind of a short-term dip into the stock price, that should be taken as an opportunity to buy. Sona BLW is something which you've been bullish on. That's something which I think has done exceptionally well. Moved on to that club of 800 plus in the very recent time frame charts. It's now been a little bit more volatile than what it has been in the previous maybe last 2-3 months, where the stock had moved from 600 levels to 800 plus mark. But then this indicates that maybe I think this could be a zone where traders who missed out earlier, they would probably get an opportunity to try and chip into this name. So I think the auto anch names are looking far stronger, more cohesive with respect to the rally compared.
Enterprises as well. Neeraj, quite a few new paper hitting the market. Any IPO that you would recommend to subscribe to or keeping on your radar?
Actually, not really. I'm not a fan of IPOs. The only one which I suggested and subscribed to and recommended was the SBI mutual fund, because I feel long term that sector looks very good to me. Otherwise, nothing specifically as such.
Okay, since you did talk about SBI mutual fund, Neeraj, wanted to revisit the capital market theme. Structural as it may be at the current juncture, where is it that you're finding or identifying buying opportunity?
See, like we had this news in BSE today, and BSE stock has been correcting. So there was an opportunity there with the stock is correcting, I think 1,000, 1,500 from the highs. So that is one where I feel that, this news will also help. Plus, NSE IPO is going to come very soon. So there'll be some comparison, so some momentum building up there. And besides the stock exchanges, I feel that, even the AMCs, though some of them have moved over the last 1 year, given a good return. But I think that sector will continue doing well because the kind of size and the kind of growth that you're seeing there will help in the margins going ahead. So AMCs is one space where I'm positive on. So there's one segment which is like KFintech, CAM, which have not performed in the last few quarters, but I think there also there's opportunity. There's a talk about even property getting added to your NSDL and CDSL, so that sector can also be looked at. So there are various opportunities there. So besides the brokerage houses, I feel the AMCs, the depositories, exchanges, there's value there and one can still look at investing.
Okay, that's what...
Stocks last 2 years have not performed. So I feel that there can be a surprise up move which can come in these stocks. And as far as infrastructure is concerned, I'm very positive on the infrastructure space, whether it's pure infrastructure capital good companies like L&T or even something like a Kalpataru or even real estate companies. I feel that they have really, the kind of, update which are coming for the rest of the year looks encouraging for real estate. And, when we are going closer to the festival season, there's always a hope that the sector can do well and bookings will pick up and sales will pick up. So even that can be looked at.
Okay. Neeraj, very quickly, from within the power pack, anything that you're liking? Railways is clearly something that you seem to be preferring, but what about power?
So power also, I feel that stocks again have not really performed since 2024, May, June, We've seen a lot of these stocks not performing well. So something like a Tata Power has also underperformed the markets, not done well. I think that stock after the consolidation, numbers can improve there because a lot of these projects in 2027, 28 should do well. So I've been positive on stocks like JSW Energy, where obviously the capacities will come in by, 27, 28. So there also I feel the capex, most of the capex has been done and will be done in the next 1 year. Besides these, there are metal power plays like just for example like Sarda Energy, Godavari Power are concerned, which are backward indicated. They have their captive power. They also feel that these companies